Well, ICICI Bank will announce its Q3 FY22 results over the weekend. We're expecting net interest income to go up over 20% to that 11,920 crore mark. That's a 2% jump sequentially as well. PPOP is expected to breach the 10,000 crore mark. Mind you, it was just below that 10,000 crore mark in quarter 2 of FY22. Hopefully a 2% growth there as well. 14.5% growth projected when we look at it on a year-on-year basis. Gross NPAs over the course of this year in quarter 1 were high. Even NPAs in quarter 2 tapered down substantially. However, in quarter 3 we are expecting that to remain stable. So we are expecting gross NPAs as well as net NPAs to remain broadly in the same region as it was in quarter 2. And that will impact PAT. Of course, PAT will go up 5% sequentially, around 17.5% jump in PAT. That will take PAT probably to 5,800 crore. Core NIMs and credit costs will remain stable. In fact, when we look at credit costs, they will continue to remain elevated, most likely coming in at around 1.25%, marginally lower from the Q2 number of 1.3%. Core NIMs will remain at 4%. In terms of advances, net advances are expected to grow 5% sequentially, breaching that 8 lakh crore mark. 15% on a year-on-year basis. Good growth in net advances. However, again, a monitorable will be with regard to how much is corporate contributing to this growth in advances. So some commentary around that will of course help. Among other commentary will be with regard to slippages and asset quality, which will be the key. Where does the bank see itself going forward over the next 2-3 quarters? Of course, with regard to growth, some commentary will help with regard to what kind of growth they are seeing in the system, as well as how positive are they on the growth side over the next 2-3 quarters. When we look at movement in stressed loans, that will also be one of the other key monitorables. When we look at the stock price, that's up 14% over the last month, 26% over the last 6 months, and 47% over the last 12 months, where the Nifty Bank has gone up by 22%. So that's a strong comparison to the Nifty Bank. It's outperformed the Nifty Bank by quite a bit. In terms of valuation though, it's pretty much in line with some of its peers. That valuation gap has shrunk over the last quarter or so, and that's reflecting in the stock price growth as well. 26% jump in stock price over the last 6 months, last 2 quarters. And the valuation gap has shrunk. The expected price to book FY23 forward is looking at approximately 3 versus an HDFC Bank of around 3.2 versus a Kotak Bank of around 3.5. So that valuation gap seems to have shrunk versus ICICI. When we look at brokerages, there is a consensus buy on ICICI Bank. So that may be good news for investors. 52 analysts have given a buy rating to ICICI Bank, with some giving an outperformance with regard to look at Jefferies at 1,000, Morgan Stanley is overweight at 1,025. Amongst others, Credit Suisse also has a buy at 900 and Nomura has a buy at 910. So a strong set of numbers expected with regard to growth broadly, and of course management commentary will be key in this quarter for ICICI Bank.